Have you ever asked yourself if you need to file a self-assessment tax return? And if you have, did you go ahead to check if you need to file a self-assessment tax return? Maybe not. Well, HMRC is cracking down on this. Missing this could cost you a minimum of £100. And so in this video, I'll be giving you a detailed guide on who needs to file a self-assessment tax return and how to check if you need to file a self-assessment tax return. If this is your first time here, my name is Amma, a chartered accountant and a tax professional from AB & Co Accounting and Tax Services. Let's get started. A self-assessment is the way HMRC uses to collect income tax from individuals who meet certain criteria, which will be explored throughout this video. And so let's jump on who needs to file a self-assessment tax return. The first one is if you receive any foreign income or gain in the tax year that you are classed as a UK resident. As long as you are classed as a UK resident, you must declare all your worldwide income to HMRC. Prior to 6th of April 2025, there was remittance basis, whereby individuals with foreign income or gain could opt to claim remittance basis, which means they only pay UK tax on their foreign income or gain they remit or bring to the UK. But from 6th of April 2025, this remittance basis has been abolished. And so you are required to declare all your worldwide income or gain to HMRC. Over 100 countries have joined the new International Information Exchange Program. This allows HMRC to receive your worldwide income or gain information. Therefore, if you decide not to declare your foreign income or gain, HMRC will get this information and will write to you to declare it. Remember, your penalty increases if HMRC sees that you are deliberately hiding your foreign income. It's a requirement to declare your worldwide income to HMRC as a UK resident. Therefore, if you're receiving foreign income or gain, do register for self-assessment immediately. That is the first one. The second one is if you are an employee with a taxable income of £150,000 or more, you are required to register for self-assessment. Prior to 6th of April 2023, this threshold was £100,000. So if your taxable income is £150,000 or over per tax year, you need to register for self-assessment. Your question may be, why do I need to register for self-assessment if my tax is deducted as source? These are the reasons. The first one is if your adjusted net income for the tax year exceeds £100,000, you begin to lose £1 of every £2 of your personal allowance. When this happens, if you don't adjust your tax code, you tend to pay less amount of tax in the tax year. And so by the time the tax year ends, you would have accumulated additional unpaid tax, which you need to pay. And you pay this to HMRC through self-assessment. So that's the first reason you need to register for self-assessment. The second reason is if your taxable income is over £150,000, it means you are an additional rate taxpayer. Therefore, if you complete self-assessment, you could claim additional tax relief on your personal pension contribution. This will reduce your tax. This is the second reason you need to register for self-assessment to be able to claim this relief. Additionally, if you make any gift aid donations, you are able to claim the relief through self-assessment. The next one is if you receive any interest outside an ISA account that is more than £10,000 per tax year, you need to register for self-assessment. Again, if you receive any dividends outside ISA account of over £10,000, you need to register for self-assessment. Once you register for self-assessment, you can then declare this to HMRC through self-assessment. The next one is if you are self-employed with a total gross income of over £1,000, you need to register for self-assessment. This applies even when your total gross income from self-employment is within your personal allowance, and that is your only source of income per the tax year. You still need to declare this to HMRC. We tend to receive a lot of queries around this. Many people think if they receive self-employment income and that is their only income in the tax year and is within the personal allowance, they don't need to register for self-assessment because they don't need to pay tax. That is false. You need to still register for self-assessment as long as your total gross income from self-employment is over £1,000. The next one is if you sell any chargeable asset and realize a gain that is over the annual exemption amount for capital gains tax, or if the proceeds are over £50,000, or if the gain that you have realized is outside an ISA account, you will need to register for self-assessment. However, if you sell a residential property that is located in the UK, that is not your main residence, and realize again, you need to declare this from the date of sale through an online facility created for this reason only within 60 days from the date you sold the property, and pay the necessary tax within the same period of 60 days. Then, after submitting it to HMRC within 60 days and paying your tax, if you are not already in self-assessment, you don't need to do anything else. But if you're already submitting self-assessment for any other reason, when completing your tax return, you need to include the sale of the residential property on your tax return. Remember to add the tax that you have paid within the 60 days to avoid any duplication of tax. So that is another thing that will require you to register for self-assessment. Another thing is if you are a landlord with rental income of over £1,000 per tax year, you need to register for self-assessment. Remember, we are going to go through the steps that you need to take to check if self-assessment is required of you, if yours is not considered in this video. So stay with me. Again, if you want to claim any job-related expenses and the total of these job-related expenses is over £2,500 per the tax year, you need to register for self-assessment to be able to claim this job-related expenses from HMRC. Again, if you're receiving any income from trust, you need to register for self-assessment. The list goes on forever. However, if your situation has not been covered in this video, please comment below and we will help you. So the first thing you need to do is to go to Google and enter in the search box, who needs to file a tax return UK. The first option that comes, which says self-assessment tax return, who must send a tax return. The next option on here is check if you need to send a tax return. Click on that. Then use this tool to find out if you need to send a tax return for 2024-2025 tax year. You click on continue. The first question that comes asks, did you work for yourself between 6th of April 24 to 5th of April 25. So if you are a sole trader, a self-employed, and you've worked for yourself, you select yes here. Let's select yes. What was your work status when you worked for yourself? You then need to select the option that applies to yourself. If you are self-employed, select that. If you are a partner in a business partnership, select that. If you're a director of a limited company, select that. So I'm going to select self-employed. Did you earn more than £1,000 from working for yourself? So this is what I said, that if you work and you receive more than £1,000 from self-employment, you are required to register for self-assessment. So let's put to the test here. Let's select yes. Then you get an answer. You need to send a self-assessment tax return. So that confirms the position that if you are self-employed and you earn over £50,000 in gross income per tax year, you are required to register for self-assessment. Let's start again and see if you are not a self-employed but someone else, and see what the system will tell us. Did you work for yourself between 6th of April 2024 to 5th of April 25? Your answer should be no. Did you work as an off-payroll worker? So this applies if you have a limited company, if you have a partnership, if you have a personal service company, or as an individual. We are going to select no. Did you get a pension? So if you are in receipt of any pension, such as state pension or private pension, you have to select yes here. But if you don't receive any pension, select no. What was your total income for the year? Income could be from your pension, your salary before tax and pension contributions. Any taxable benefits, such as company car, property, or investments. So you select the range and then proceed. Let's select over 60,000. Did you claim child benefit? Again, if you claim child benefit and your income is over 60,000, then you will be required to complete self-assessment. And so let's say yes and proceed. You or your partner may need to send self-assessment tax return. So these are some of the questions that the system asks you to tell you whether you need to complete self-assessment or not. The answer based on your answers will change. And so use this tool to go through to check if you are required to file a self-assessment tax return. As always, all our content, including this one, is for education purposes only and not in any way any kind of a tax advice, accounting advice, or any form of advice. For personal tailored advice, please contact us using the details in our description or speak to your advisor. I hope this video has been helpful. If it has, don't forget to subscribe to our channel for more tips such as this, for more tips around tax reduction. Thank you for watching.